In America today, something silent but powerful is happening behind closed doors. A political standoff that has stopped paychecks, frozen services, and is quietly draining billions from the world's largest economy, the government shutdown. It's not just a story about politicians fighting in Washington, it's a story about money, power, and the ripple that hits every American's wallet, stock portfolio, and dream. The Congressional Budget Office has warned, if this shutdown lasts for weeks, the US will lose $7 billion in GDP, 6 weeks $11 billion, 8 weeks $14 billion. That's not just numbers on a page. That's small businesses without contracts, workers without pay, families delaying bills, and investors holding their breath wondering what comes next. When the US government stops, so does the rhythm of the economy. Think about it. 750,000 federal workers sitting idle, not spending at grocery stores, not paying daycare fees, not eating out, multiplying through every community from DC to Dallas. The shutdown might seem like a Washington issue, but its heartbeat echoes in every American town. Even if you've never stepped into a government building, you'll feel it when consumer spending dips, when markets hesitate, when the confidence that drives Wall Street starts to flicker. The last major shutdown cost the economy billions and took months to recover. But this one is shaping up differently. It's landing at a moment when inflation is cooling, interest rates remain high, and global uncertainty is thick. That means every lost week isn't just a pause, it's momentum reversed. Economic recovery runs on confidence, and right now confidence is being tested. Think of GDP as a giant engine. Every day it turns, fueled by spending, investment, and productivity. The shutdown throws sand into that engine. Each delay in a federal paycheck means one less grocery run, one less utility payment, one less car purchase, and those tiny pauses accumulate into billions lost. The CBO says most of this activity will bounce back after reopening. But not all. Some is gone forever. That's the painful truth of economics. You can't rewind time. If a restaurant misses 20 lunch shifts, those meals are never sold again. If a contractor can't finish a project because funding froze, those hours vanish from GDP. The macro loss becomes a micro heartbreak repeated millions of times across the country. Now let's pull the lens back wider. What happens when the biggest economy on Earth slows down, even for a few weeks? The world watches nervously. Global markets feel the tremor because US demand fuels trade from Europe to Asia. Even a small contraction can ripple through commodity prices, shipping rates, and investor sentiment. The shutdown isn't just an American problem, it's a global signal. That political division can paralyze the economic engine everyone depends on. And if you think investors ignore that, think again. During shutdowns, volatility spikes, confidence dips, and foreign capital hesitates to park money in US assets. That's the hidden cost, trust erosion. Economic power rests not just on numbers, but on belief, the belief that the US government functions predictably. When that belief cracks, markets flinch. The irony is that markets hate uncertainty more than bad news. Bad news is quantifiable. Uncertainty is chaos, and shutdowns breed uncertainty. Investors don't know when agencies reopen, when data resumes, when budgets stabilize. That uncertainty freezes decision-making across the private sector. It's like waiting for a traffic light that never turns green. Now imagine you're an everyday American watching this unfold. You're seeing headlines about billions lost, politicians arguing, and federal workers lining up at food banks. You might think, how does this affect me? Here's how. Your mortgage rate, your 401k, your grocery bill all are indirectly touched by government stability. When the economy wobbles, interest rate expectations shift. The Federal Reserve reads slower growth as a reason to pause hikes, while markets interpret dysfunction as a red flag for risk assets. That means stock swings, delayed investments, and tighter corporate budgets translate into fewer opportunities, lower bonuses, and slower wage growth. The shutdown might feel distant, but its fingerprints reach your wallet. Now, let's break down the mechanics of the loss step by step. First, furloughed workers. Unpaid employees stop spending. That alone cuts billions in consumption. Second, contractors suspended. The government is one of the largest purchasers in the world from construction to cybersecurity. When contracts freeze, private firms lose income, cut hours, delay hiring. Third, data silence. Important economic reports, like GDP revisions, employment numbers, and inflation metrics go dark. During shutdowns, those agencies can't publish timely data. That blindfold makes it harder for investors and businesses to plan. Even Wall Street traders rely on federal data to predict trends. Without it, uncertainty doubles. Fourth, psychology. Economic performance isn't just math, it's mood. When citizens lose confidence, they save more, spend less, and delay major purchases. That's the consumer side of recessionary behavior born from fear. And fear spreads faster than inflation. The CBO's $14 billion estimate for an 8-week shutdown isn't just a forecast. It's a warning, a reminder that time is money, and political gridlock is expensive. But here's the part most people miss. Some of that money never returns. You can reopen offices, pay back wages, but you can't force consumers to re-spend missed moments. The economy doesn't rewind. It recalculates. And recalculations are costly. Now think about the symbolism. This shutdown is happening in a nation that prides itself on stability. Yet its own system can stall because of internal division. That contradiction sends shockwaves through global faith in American governance. For decades, the dollar has been the world's safe haven asset, the place investors run to when everything else feels risky. But what happens when the safe haven itself looks uncertain? Confidence cracks ever so slightly. That's why economists are watching this shutdown more nervously than previous ones. Not because the short-term loss is catastrophic, but because the long-term trust damage is cumulative. America's strength has always been predictability. Markets know it pays its bills on time, delivers data consistently, and maintains global leadership. Every shutdown chips away at that aura bit by bit. When trust weakens, borrowing costs rise subtly, foreign investors diversify quietly, and the image of reliability dims just enough to matter. Now, if you're watching this as a wealth builder, you need to ask, what does this mean for me? Here's the truth. Crises like these expose how fragile financial systems can be. But they also open doors for strategic investors. When uncertainty spikes, smart money watches for mispricing in markets. During every shutdown, there are sectors that dip too far and rebound fastest once normalcy returns. Historically, consumer discretionary stocks, airlines, and service industries rebound sharply post-shutdown. Because pent-up demand explodes once people get paid again. The key isn't to panic, it's to prepare. While news channels amplify fear, financially intelligent people position themselves calmly. They remember that volatility is opportunity in disguise. This is where financial education separates winners from warriors. While others complain about political dysfunction, you could be studying which sectors will benefit most when the lights turn back on. Because they always do. That's the cycle of resilience baked into capitalism. Even when politics falter, markets adapt. Businesses find ways to continue, entrepreneurs pivot, and consumers eventually return. That's why despite 14 billion in lost GDP, the US economy won't collapse. It will absorb, adjust, and accelerate again. The question is, will you be ready to ride that acceleration or watch it pass you by? When fear dominates, prices drop below value. That's when disciplined investors build positions, not when optimism peaks. Every shutdown reminds us that government can stall, but personal initiative doesn't have to. If you build your financial literacy, maintain liquidity, and invest long-term, you transform crisis into advantage. Because wealth isn't built in comfort, it's built in chaos. The most successful investors in history didn't wait for perfect conditions, they mastered imperfect moments. The current shutdown is one of those imperfect moments. Yes, it's draining billions, but it's also revealing who truly understands the game. Money never disappears. It just changes hands. Your goal is to be on the receiving side when it moves again. Every dollar not spent during a shutdown will eventually be spent after. It's like a spring compressed tighter each day it's delayed. The release can be explosive. And that's why patience, awareness, and timing matter more than panic reactions. If you're holding stocks, don't let headlines shake your logic. Look at fundamentals. Is the company still generating demand? Will government contracts resume? Are earnings intact long term? If yes, then this noise is temporary. But if you're over-leveraged or dependent on short-term cash flow, learn from this moment. Keep an emergency fund. Keep optionality alive. The same principles that protect families protect investors: preparation, diversification, and discipline. The CBO may predict 14 billion lost GDP, but it can't measure the lessons individuals gain through awareness of vulnerability. But here's the truth that most people don't want to face: you can't live an extraordinary life with an ordinary mindset. The difference between the rich and the poor isn't just money. It's how they think about money. The poor think about spending. The middle class thinks about saving. The rich think about investing. They understand that money is a soldier, it works 24/7, even while they sleep. That's the kind of relationship you need with your money. If you ever feel broke, it's not because you don't have money, it's because you don't have a plan. Let's say you make $3,000 a month. Most people spend $2,900 and save $100, thinking they're being smart. But here's what the wealthy do: they invest first, spend later. They'll put $1,000 into something that grows, and then live on the rest. Why? Because they understand one rule that changes everything. Make money work harder than you do. You see, money doesn't care if you're tired. It doesn't need rest. It doesn't need food. It just needs direction. When you give it direction, it multiplies. When you neglect it, it disappears. Let's make this real. Imagine two friends, Jack and Ethan. Both earn the same income, $4,000 a month. Jack spends his money on comfort, new gadgets, restaurants, clothes. Ethan invests $1,000 every month in index funds and side projects. 10 years later, Jack's still stuck, still broke, still hoping for a promotion. Ethan, he's financially free. Not because he worked harder, but because he thought differently. The wealthy understand something powerful. They don't chase money. They build systems that attract it. That's the secret. You can't get rich by chasing. You get rich by building. Build a brand. Build an audience. Build a business. Build something that keeps working even when you're not. Now, let's talk about why 95% of people will never take this advice. They want comfort more than freedom. They say they want success, but they won't sacrifice their weekend Netflix. They say they want wealth, but they won't study money for even 1 hour a day. You can't outdream your habits. You either pay the price of discipline today or the price of regret tomorrow. There's no discount. The wealthy don't wait for permission to start. They start messy. They start scared. But they start. Most people are waiting for the right time. But the right time never comes. It's created by those who move anyway. Every millionaire was once uncertain, broke, and scared. The only difference? They moved through it. There's a saying, a salary is a drug your boss gives you to forget your dreams. And it's true. Your paycheck keeps you comfortable enough to never question it, never risk it. But comfort is the enemy of growth. If you want to change your financial life, you have to stop being emotionally attached to security. Think about it. Every major breakthrough in your life came when you were uncomfortable. That's where the growth happens. The comfort zone is a slow death. It kills your ambition quietly. So ask yourself, do you want to be safe or do you want to be free? Because the rich choose freedom every time. They take calculated risks. They fail often, but they fail forward. Failure isn't the end, it's tuition for success. The poor see failure as a wall. The rich see it as a door. And let's get something straight. You don't need to be born rich. You just need to decide to stop thinking poor. Every millionaire started from zero. Some started with debt. Some started with pain. But they all started. You don't need money to start. You need mindset, creativity, and consistency. When you stop saying, I can't afford it, and start asking, how can I afford it? Your brain starts working differently. That's what separates dreamers from doers. Your brain becomes a problem-solving machine, not a complaint machine. Let's talk about energy, because money follows energy. If you spend your energy gossiping, scrolling, complaining, you're draining the very resource that could make you rich. But if you redirect that same energy into learning, building, and networking, everything changes. Most people waste their evenings on entertainment. The wealthy use theirs for education. While others are watching reality shows, they're learning real skills: copywriting, investing, sales, marketing. These are the skills that print money. You can't build wealth with low-income skills. If you're trading your time for money, you'll always be limited. But when you trade value for money, the possibilities become limitless. That's why the wealthy focus on leverage, using systems, technology, and people to multiply their results. Ask yourself right now, what skill could make me $10,000 a month if I mastered it? Maybe it's content creation. Maybe it's investing. Maybe it's sales. Pick one. Study it like your life depends on it, because it does. Here's another truth. Money rewards speed. Not rushing, but decisive action. When you see an opportunity, take it. When others hesitate, move. While others are still thinking about it, you've already executed. That's how winners win. They act faster than fear. Let's talk about belief, because this is where 80% of people lose before they even start. If deep down you believe that money is evil, that rich people are greedy, or that you'll never make it, guess what? You're programming your brain to fail. The universe doesn't give you what you want. It gives you what you believe. Start telling yourself, I deserve wealth because I provide value. Money is not evil, it's a tool. It amplifies who you are. If you're generous, it'll make you more generous. If you're lazy, it'll expose that too. So fix the mindset first. Now, here's something no one tells you. Getting rich is not about luck. It's about exposure. The more you expose yourself to opportunities, the higher your chances. Talk to new people. Read new books. Watch videos that expand your perspective, not just entertain you. Remember this line: it could change your life. You can't change your life until you change your environment. If you hang around people who talk about problems, you'll inherit their problems. But if you hang with people who talk about ideas, you'll inherit their success. Surround yourself with growth-minded people. That doesn't mean fake motivational friends. It means people who push you, challenge you, and remind you who you could be. And finally, let's talk about discipline. Because this is where dreams either live or die. You can have all the motivation in the world, but without discipline, it's useless. Discipline is doing what you said you'd do long after the excitement is gone. You'll have days where you'll feel like giving up. Days where the results don't show. But remember, even the seed doesn't sprout the day it's planted. You water it daily, believing in the unseen. That's how wealth works. You invest time, effort, and belief before the reward arrives. If you stay consistent, wealth becomes inevitable. It's not a matter of if, it's just when. So let's recap this one truth. The poor work for money. The rich make money work for them. Which side are you choosing today? Because if you're watching this video, maybe it's not an accident. Maybe this is your wake-up call. The moment where you decide to stop surviving and start building. Your future self is waiting. 10 years from now, he'll either thank you for starting or hate you for wasting time. The choice is yours. So close this video and take action. Start that side hustle. Read that finance book. Learn that high-income skill. Because wealth doesn't come to those who wish, it comes to those who work with wisdom. And remember, money isn't the goal. Freedom is. Money is just a tool to buy your time back, to live life on your terms. That's the real definition of being rich.